different softwares. You can't even split it. Like, you know, you can do like 3 splits when you're doing a return or the refund. You can't even say, well, I'm going to take my fees out, you know, here, and then you get the rest. There is software. That's where the bank products come in that allows you to do that legally. That's one of the things, you know, when you think about, you know, laws, that's one of the laws you need to know. You can't separate. You can't take yours and give them the rest. As a tax preparer, that's where the bank products come in. They could pay you in cash. They could pay you cash app or any type of electronic way. But you cannot physically split it and put your banking information. Say, well, I'll take this amount and they'll take that amount. Written advice, 10.37. Written advice is protection for you primarily. This whole circular 230 is for you, the tax preparer. So written advice is just taking notes. I have, you know, little pieces of paper I keep around my desk. So if a client comes in, and you always have something to write on. I don't care what it is. I have little notepads all over the place. Because when you're meeting with a client and you're taking notes, even though it's not an official typed out, you know, document, it's a note. And what you have to put on that note is the date, the time, who you're talking to, and what are you talking about. And if it's somebody else in there, then you put that in there and put it in a file. If you don't want to keep a paper file, I told you I'm old school. I got notes and papers, but you could do electronic. When they give y'all finished and you upload it and download it into their file, as long as you have some type of written advice. If you want to take it orally, if they want to, you know, you want to record them on your phone and then upload it into their file, as long as you think about protecting yourself, if you have to go before the IRS, I'm going to get it. Disreputable conduct. You want to be honest with your clients. That's 10.51. You want to be honest with your clients. You want to be able to talk to them about their tax issues. You want to have, you know, good moral character. You don't want to be trying to be conniving and you know, be dishonest with your clients, because you're not going to get any more clients. Because if someone come back, that first, you know, good news takes forever to travel, but bad news, oh, they on the phone, they on Facebook, they on all kind of social media talking about your service. If you get them $22,000, crickets. So just think of that. Think of your conduct. I had an audit video to show, but you know, you guys could Google to find a video because we got a little bit more information to cover. So that's the circular 230, and I had it up. I was going to show you guys. One second. Show you again how, and it's right on the IRS website. When you go to the IRS website, you can just type in circular 230, and then it'll bring up this, and it's user friendly. You have the main stuff up at the top, you know, what you're going to do before you know, be able to become a tax preparer. And then it has the breakdown. And although it's 44 pages, you can still find, like I talked about, the diligence as to accuracy. Or we talked about knowledge of client's omission. That's what, letting your clients know what's wrong with their return. So you click on that and it'll take you right to that section. It gives a breakdown. Diligence as to accuracy. So basically this whole circular 230 is about due diligence and what you need to do and how you need to do your job. That's what this is referring to, your job. So you see how it breaks it down. Each section is broken down. You're talking about the I, the R, and the S. So they have it all broke down for you. You could print out. This is what I'm talking about, like learning the laws. Don't let this be a fear for you, like, oh, I don't want to do taxes because I don't know the laws. They provide you the information. It's just you're going to have to get 10x about it and read up on them, just like I gave you the basics. If you're an avid reader, you could print a couple of pages, read it while you're at work or while you're at the nail salon or but it's broke down. Like I say, the content here, and you just click on it, and then it'll take you to what you need. So that's the circular 230. So when we talked about the circular 230, that's covering us, the tax preparers. Now we're going to discuss a little bit about the publication 947, which is about representing your clients before the IRS. Even though you might have your P10 and you feel like, oh, I'm going to prepare a tax, I could do this, I got my personal tax identification number, you still cannot talk to the IRS on behalf of your clients. So that's where this publication 947 come in, because a lot of your clients are going to be freaked out if they get a letter or whatever. So by you your client completing the form 2848, and the IRS believes in numbers and acronyms, and so basically form 2848 is just giving you authorization to speak on your client's behalf. That's basically it. Yes, they're gonna ask you for it. When you call them, they'll ask you for that form. They'll want you to fax it to them, and so you'll be able to talk on that client's behalf. And you got a power of attorney, which is an extra step. If a client gives you power of attorney, that means they got some heavy issues with the IRS. And I think out of my 20 years, I've had to do 3 power of attorneys and several 2848s. So a power of attorney basically pushes your client out the way and say, I'll handle it. Of course, it's the fees gonna go up because you ain't got to worry about it. I'll handle it. So the power of attorney works the same for the IRS that it will work if you did a power of attorney over your a family member's affairs. You handle, they don't have to do nothing. When medical stuff happened, I was a power of attorney for my uncle, and he lives in Chicago. They would call me. He had a sister, but they would call me because I was his power of attorney to make financial decisions for him or to make health decisions for him. So that was a power of attorney over his personal affairs. So you will have power of attorney over your client's IRS affairs. And like I said, it allows you to actually speak on his behalf, the client's behalf, and meet with the IRS with the client without the client even being present. So that's the publication 947. Then we have the simple tax. Publication 4557, which covers your clients. So circular 230 covers you. Publication 4557 covers your clients. So when you think about that, you think about your client's rights, and they don't know. They just bring you your papers and say, do my stuff. But the IRS know what their rights are. So one main thing is protecting your client's information by any means necessary. By any means necessary. Because you can get hit with fines. If you got 100 clients and the IRS come in and you don't have a file cabinet with a lock, and the key is not in the file cabinet, the key is secured and in your desk and it's also locked, you can get charged a fine for each one of those files. So you have to protect your client's information by any means necessary. That's if it's a physical or if it's virtual, if it's in the cloud or on your, your computer. Um, Make sure that your clients have unique usernames and passwords, because some of your, you may have, like for me, I do more than just taxes for my clients. So I have each one of them have their own, I have a file for each one of my clients with their usernames and their passwords, so that, we can communicate, they can send me documents, I can send them, documents. Like I said, store your client's information in a locked file cabinet, locked. And the IRS like for you to have, several different layers. So, for example, when I used to first start, I would do my taxes at home. I would have my locked file cabinet inside of my office, my home office, which also had a lock on it. So that's kind of double. And then, it's in our house. So actually, we had triple: a locked door, front door, the locked office door, and then a locked file cabinet. So that's, one of the main things they want to make sure that you're securing that client's information. And you want to make sure if you have, like most things, I got paper and I have digital, which is stored on my computer with encryption software. So, you can look out there and find all kind of antitrust, antivirus software to allow you to secure your client's information. We actually have in our office, we have software that's on all of our computers because we do taxes. We also do other things in our office. And like I was telling you earlier, don't share your client's information with anyone, not even your family, because you don't really know who your family knows. So you're talking to them about Mary's tax situation and how you had to help her or how she had got a refund or whatever. But Mary might owe this person that you're talking to. So they going to run and tell Mary, oh, I know you just got $10,000 on your tax refund. So why don't you pay me my money? And she's like, how do you know how much I got? Well, because you talk to your family member or friend about Mary's situation. It's hard because some people cannot hold water. But if you talk to people, do not use names, figures, or nothing. Just do, general. I did this person taxes the other day and they got back $10,000. Well, the average return is between, 5, and for me, my average returns are like $5,000 and $12,000. So they don't know who in that cycle got that amount of money. So the best thing is just do your job. Don't discuss your tax client's information with anyone, unless there's somebody in the office and they helping you with this client's file or something. Otherwise, just keep it to yourself. It's better to be safe than sorry and be sitting in front of the IRS trying to explain. And some clients will, report you. I thank God. I knock on wood. I haven't had any of those, but I always just think of the what ifs, because I don't want to stop doing taxes because of fear. So I always think of the what ifs. So we've covered the simple tax laws, and those are the main ones that you really need to kind of familiarize yourself with. Becoming a new preparer, because you will be working for someone, unless you have some type of tax experience and you willing to do it on your own with some other software that's out there. But you still need to know kind of about what you're doing before you start doing other people's taxes. So now here, if you have your form, if you have we're able to pull up your form, you're going to switch gears and just work on the top part of the form. So if you were able to pull up your form, then, and all of the laws and stuff, remember I told you it's so easy. Don't let law eliminate, don't let law stop you from achieving your goal. Here's the publication 947 about the power of attorney. Everything is on the IRS website. So, and if you want to go to a specific section, you just click on it and it's going to take you to that section. Easy, right? Told you. Simple tax laws. Easy. All you have to do is find it, click, point, and click. And just, every night, just read a little bit every night until you become proficient in, simple tax laws. This is the other one, the publication 9557 about their client's information and securing it. I mean, it's 21 pages, so I'm not going to read all this to you. I broke it down and gave you the summary for it. But this is on the IRS website too, so you could find it there. So let's see. A few people said that they had their form. Okay. So we're gonna go into the form, and I told y'all I'm old school. So even though I have it on the computer, I was so mad when they took everything and went electronic, because I love working with paper and storing paper. Just paper feels so real to me. So now what I do electronically, and then I print it out. So I still have my paper. But eventually I'm hoping to transition to the cloud and not worry about paper. I know it'll save me money and ink, and so that's what I'm working towards. That's one of my goals, to be able to trust the cloud. So we're going to go over the form, just the top part. And when I say the top part, let's see. So if you have your form, wonderful. If you don't, you can go and pull it up later. So, and this form is for 2019. Of course, when you start doing taxes, the form will, this date will have 2020 on it. So when you have your tax form, the main thing, this is a part of your due diligence. And make sure you're getting the correct information from the correct person and putting it in the right spot. Because it will get kicked back so fast if you do not have all that information. Because remember, the IRS is connected to all these other entities. So the IRS is connected to the Social Security Department. The IRS is connected to the Department of Education, Child Support, Department of Financial. So all of, it's all electronically connected. So when you're doing your tax forms, make sure you're getting that correct information. Meaning, make sure you're getting their IDs and all that stuff. So when you're working with, especially, you should get it from everyone, but if it's a new client, you want to make sure that they have these things in place so that you will be able to go ahead and do their return and not have stuff kicked back on you. So you want to make sure that you have the correct state ID, that it's not expired, because if they're going to do a bank product, the ID has to be valid, or their driver's license, and it has to have a picture on it. Security cards. Security cards have to be in the same name that when a Social Security card has to be the same name that's on the ID. If you just, recently or previous years got a new ID, all that stuff they had to fix. Like I have a hyphenated name, but so on my marriage license, my name is Samantha Johnson hyphen person, but on my social security card, they have it Samantha Johnson person. So guess what? My driver's license says Samantha Johnson person, not Samantha Johnson hyphen person. So if it was Johnson hyphen person, it would start with a J. But since they decided, since on my social security card it's person, so it starts with a P. So that stuff, it has to, because even them little bitty things I'd have had kicked back because, they didn't put junior on their tax return, but on their ID and on their social security card, they have junior. So just little stuff to look for. Make sure that all the tax forms are correct. When you're doing taxes, you'll see that you have schedule A, B, C, E, F, G. So you have all these things that could be attached to the tax form. It's just the initial, this is to get you in the door. The 1040 is to get you in the door. Now, behind the door, you got all this other stuff coming at you. So you have to make sure that all those forms are correct and correlate with the 1040. Make sure that that banking information is right. What I started doing was having the client either print out the banking information, give me a check from that bank, or go to the bank and get a document with the numbers. Because believe me, that is the most frustrating thing. I've had clients that give me the numbers and then they believe that I have their money, not knowing that you gave me the wrong banking information. So you have to make sure that that information is correct when you're doing the return. So filing statuses. Filing statuses. So you see that you have the different filing statuses. You have single, you have married filing jointly, married filing separately, head of household, qualifying widow. The main ones that are used are for tax preparers. You got your married filing jointly, but you got single, married filing jointly, head of household. Those are, in my experiences, those are the main three that are used. And we know single is you're single. You're not married. So single is single. You could be a single young person or a single adult, but single is single, plain and simple. Married filing jointly is when you're married and you and your spouse are together and y'all filing jointly. That's where you have it set. And the boxes, when you're doing it, when you're at the software, you could click on these boxes. Back in the day, we had to check mark and then mail it in, all that good stuff. So now everything is electronic. So you just click on the boxes and you fill out the information. Married filing separately is a little tricky. Even though you will click the box, married filing separately, you guys see where, you see, married filing separately. They had one where you had to put once you put married filing separately, then in the software, it'll come up and ask you basically what's your spouse's name and how long y'all been separated. Because I had a couple, actually only happened one time where the couple was going through something. And so I did one person's taxes and the other one got theirs done somewhere else. And when it went through, it was like this person already been claimed. Well, this social security number has already been used. Come to find out, they went and got their taxes done somewhere else and told people that they were separated, but failed to tell the other party that they did this. So it delayed their taxes, and of course, it decreased it significantly. So when you're filing jointly, you get all kind of extra deductions and credits, and as when you're filing separately. Head of household, basically you run your house. You have to have a dependent in order to be head of household. A kid, a child, or family member, or parent to file head of household. And when you say qualifying widow, that's basically when somebody passed away, your loved one passed away, your spouse, your husband or wife passed away, and you're filing taxes. You get extra credits and extra deductions for filing widow. So we've covered the filing statuses portion. Then here, so let's just say we did, let's do head of household. Click head of household and put your name, your client's name, social security number, and on the electronic it'll fill in just like that. So you have the name, you have your address, and this is very important. This, people miss this, but you need to make sure that if you have apartment number or suite number or unit number, make sure that you fill it in, because you can be getting very important documents, and if you don't have this information, it's going to go back to the IRS. Another important thing, if your client, something goes wrong with their return and they don't get it electronically, then the IRS is going to send a check and it's going to go to the address that you have on this form. Even if they've moved, or like they say, oh, that's not my mailing address or whatever address you put there, that's where the documentation is going to go to. So that's one of the things, you got to make sure that the information is correct. So you have your address, your name, the social security numbers. If you're in a foreign place, which I've never did a foreign tax return, then you put the information there and make sure that everything is correct. Everything before you move on. Even in the computer, make sure it's correct. Then you're going to move on to your standard deductions. And people think about all the deductions, earned income credit and all that, but these are your standard deductions. This is what you're going to get no matter what. So first thing is, can you be claimed? If you can be claimed, then you have to make sure that you mark it. It's going to decrease whoever's doing, whoever this is, it's going to, it'll decrease the client's refund. They'll still get something, but they won't get as much because somebody else is already claiming. And this mainly refers to college students and parents claim them, single adults that maybe still living home, and parents that you claim because they might be independent, but you're doing like 75%, you paying all their bills. They might still, have a little space or whatever. They may even live with you. So that's when you say you can be claimed. But if no one can't claim you, then you keep moving on. Now you talk about the dependents. Dependents, you can look at publication 501, which breaks down who is and who is not considered dependent. Basically, a dependent is a person who is a dependent. They're a person that you're taking care of, whether it's a child, or an adult. At one point, we were taking care of my husband's disabled brother, which he was a dependent. So the tax credit that we got for him was the same credit that we got for our children because he was disabled. So it was the same credit. So that's an example of a dependent. But you will list your dependents, you will list the client's dependents here. And just like with the client's information, their information has to match. So you have to get copies of their social security cards to make sure that what's on the social security card matches what you're filing. So you have the person's name, and their social security number. And then what relationship are they to you? You have to put that, whether you want to or not, you have to put it. Now, you can't put child or adopted child or whatever. You have to put what relationship. In the electronic version, like, they give you more choices, but basically you have to put the relationship. And then you have to check if they are, for the child tax credit, depending on, their age and credit for other dependents. So like your child tax credit, they have to be 16 or younger. Basically, they're still in school, so you get credit for them. When you select other dependent, that's like if you have, like, my husband's brother, he was considered other dependent. So I would select other dependent if someone has someone else living with them besides their child. And again, you want to make sure that everything is double checked. The name, social relationship, child, you have to make sure that everything is double checked so that you will make sure that your return is complete and not get kicked back. Because remember, if your return gets kicked back, then that means your client has to wait longer, which makes a negative mark for you and decreases your client base. So it's best to just make sure everything is done right the first time, and that way you can just keep rolling. So this is the part that we covered this week, the top portion of doing the tax return, because it's just basically double checking, making sure everything is done. Easy, right? So it's simple. We'll get through it. Now, next week, we're going to work on the income part, which is a little bit, the income, credits, deductions. We're going to a little in-depth with that, and that's what we're going to be working on next week. So again, if anybody have any questions, they could put it in the chat, and we'll go over that the end of the class. So this form here for this year, 2019, it was 2 pages. Back in the day, it was, it used to be at least 5, 6 pages. So we have, next thing we're going to talk about is the levels of certification. And we'll go through this pretty quick because we already talk about the PTN and what it means and how you have to obtain it. So each one we're going to go through pretty quick. PTN we're going to really concentrate on next week because we're actually going to obtain our PTN. Actually going to fill out the paperwork to obtain our PTN next week. So PTN, we all know, is the personal tax preparer identification number. That is issued through the IRS. It's electronically. It's easy to complete online. You have to renew it every year. And guess what? Free. Yes, some things in life are worth, that are worth something is free. This is worth gold. So that's what the P10. And what I want to also remind you about with the P10, when we was talking about due diligence and some tax preparers not caring about whether they make a mistake or not, the P10 is your tracker. Yes. So if the IRS get a lot of returns back that you didn't do your due diligence or this and that, they could pull all your returns and audit them. I do know a young lady that happened to. One of my clients, this girl was doing taxes or whatever, and they had a few other returns get kicked back. They audited her for all of her returns. So everybody return that she did got audited. And unfortunately, the client that I had, she got caught up in the audit too. But because I like to read and I'm a avid, avid advocate for people and helping them get out of, different situations, I was able to help my client get down to where she ended up owing them. It started out being like 15,000, and by the time we finished over a 2-year period, I think she ended up paying them like $2,000, a little over 2,000. But so you got to be careful. Do your due diligence. That's all. You do your due diligence because you do not want to mess up your future. You do not want to start having the IRS auditing your returns. So that's what the P10 is, so that they can keep up with what you're doing and how you're doing. The enrolled agent, that's the next step. So we'll just touch bases on it. We're not ready for the enrolled agent yet. I'm not even an enrolled agent, and I keep saying I want to do it, I'm gonna do it, I'm gonna do it. But when I think about the time and the energy that I have to put into being an enrolled agent, I feel like it's more, I could use more of my time to get more people trained to be tax preparers so that they can get their P10 and start doing better for themselves, their family, their clients. I'm going to get to it. It's not a fear. I'm not afraid of it. It's just that it's not my time right now because I have to help others. I feel obligated to help other people to be and tax preparers so that they can blossom. But an enrolled agent, first thing anyway, you have to do is become obtain your PT. So I am on the road, so I'm not totally out the ballpark, but you have to obtain your P10. The enrolled agent is also issued through the IRS, and you have to take an exam for that. And it's renewable every 3 years, and it only costs $67. So it's not, the financial thing is not an issue. So as long as you take your steps, you're taking this course. By the end of this course, you will have your P10. Learn how to do taxes because you have to go through all the. So learn how to do taxes first, and then seek out being an enrolled agent. EFIN, which means electronic filing identification number. Now that's what I have. So I'm not an enrolled agent. And basically what an enrolled agent has the ability to do is to represent the client before the IRS, and you don't have to get, all the documentation. And so that's basically what an enrolled agent does. It's a little bit more, but we'll just leave it at that. But the EFIN is, that's authorized, you're authorized to e-file returns. So the EFIN basically is attached to a business. So I have my EFIN because I have people that work for me. So the process would be your P10 will go on the tax return, but my EFIN will be on there. So do you think I'm going to let you mess up? No. So when you do your tax returns, they will filter through to our software, and me or someone in my office will have to check it. You have, check and balances before it's even submitted through to the software. So it's several steps that goes through before a return is actually submitted to the IRS. So that's what the EFIN is e-service. You have to create an e-service account through the IRS. So, you know, it's quite a few steps. Fingerprint, you got to get fingerprinted. If you have another location, you got to do the same thing. So each location will have to have its own individual EFIN. So I have my P10 and my EFIN, and you know, I work on my enrolled agent later. Whew. We're coming down, coming down, coming down. So this week, what I want you guys to think about, this is the quote for the week. You cannot fulfill your dreams unless you dare to risk it all. With that being said, what is your dream? What are you willing to risk to achieve your dreams? Today, you risk 2 hours to achieve your dream. Some people go to bed early, so you decide you was going to risk a little sleep to stay up for this webinar to achieve your dream. So think about that. You cannot fulfill your dreams unless you dare to risk it all, unless you're willing to go that extra mile. Sometimes people are not going to want to go with you. You're going to walk it alone. But one thing that you can remember, think about footprints. Think about when you go it alone, you might see two footprints, 2 sets, and then all of a sudden there's only one. Think about it, because that's when the Lord, when God decided to carry you the rest of the way. So don't be afraid to step out and do taxes. People, your family, they might be, oh, no, I ain't finna let you do my taxes because you just started. Okay, then go to somebody else. Go to somebody else, because it's going to be a lot of people that's going to be needing taxes done this year more so than ever. Because with all the unemployment claims, some people had taxes taken out and people don't know. So down here, I'm going to give you a tip that people might not know. If they had taxes taken out of their unemployment checks, they need to file taxes. Many people don't think that because it's not income, but it is income. If you had taxes taken out, you need to file unemployment. You need to file taxes. So it's going to be a lot of people filing taxes or need to file that didn't think they needed to. So you have to, let them know. They say, oh, no, drop some knowledge on them. Don't be afraid. Drop some knowledge on them. Research it too. If you don't believe, research it for yourself. You know the IRS website. Google it, and then drop the knowledge on them. And then tell them, give me your W-2, give me your unemployment statement so that I can start on your taxes. Next week agenda, we going down for the home stretch. Next week agenda is going to be about obtaining your P10. So we're going to pull it. If you don't have a computer, a good internet, you're going to have to make sure that you can get to one. Because we're going to actually go step by step, just like what we did with the tax form, on what you need to do to obtain your P10. And at the end, we're going to hit submit. And then that week, get your P10, because we're getting ready to go to work, people. We got work to do. And then we're going to go over the 1040 tax form part 2. We're going to work on that so that we could actually start moving into making that money. Making the money so that you can get paid for your services as a tax preparer. So if let's check and see if I have any questions. With all my information, you guys know it come from the R in the I, the R in the S. So let's see if we have any questions out there. All right. Anyone else? Nobody have any questions for tonight? All right, and we're gonna get out a little bit early. And remember, we'll be here next week. Don't get too full with the turkey and don't show up for class. 6 p.m. Sunday. We'll be working on our P10 and completing our 1040. Well, continuing our 1040 form. I look forward to seeing you guys next week. Enjoy your turkey day. Enjoy your family. Start talking to them about your new job. Letting them know what you're going to do and how you can help them with their unemployment. You can help them get some money back from their unemployment. And I will talk to you guys next week. Bye-bye.